Are your tools and subscriptions really assess or just hidden expenses draining your money? Let's clear it up. Why your software costs confuse your accounting? The same tool might be recorded differently depending on accounting rules and the expected benefit period. Should it be an expense today or an asset over time? Small choices like this can make a big difference in your financial reports. In this video, we will make it easy. You will learn how to think about costs, not just what to record, so you can handle any tool, software, or subscription correctly. Why should you care? Because how you record costs changes when profits show up. How easy it is to compare results and how well you understand your finances. Two similar businesses can look very different based on this. If you are a freelancer, founder, or a student, knowing this helps you read financial statements correctly and avoid just click and record habits. It makes your accounting smarter and clearer. Stop memorizing rules. Ask questions instead. What did you acquire? How long will it benefit you? Do you control how it is used? These three questions make accounting much easier. Accounting works best when you reason through transaction rather than labeling it by habit. This framework works for any tool, software, or service. By thinking through transactions, you'll make smarter, consistent accounting choices without relying on the checklist. An expense is something you use up quickly. It gives a short-term benefit, often comes as repeating payments, and you don't control it long-term. Many subscriptions are recorded as expenses because they provide short-term benefits. Though some prepaid or multi-year subscriptions can be treated as assets because they give temporary access instead of ownership. Once the period ends, the benefit ends too. An asset is something that gives value over multiple periods. The business controls it and it has measurable future benefits. It doesn't have to be physical. You can't touch intangible assets, but as long as you control them and they last, they count. An asset provides future benefits and is controlled by the business, whether tangible or intangible, as long as its value can be measured reliably. Tools and subscriptions aren't the same. One is usually a one time purchase you own, the other depends on ongoing payments for access. Even if they look similar, accounting treats them differently. Most ongoing subscriptions are treated as expenses, but some prepaid or long term subscriptions can be capitalized. Quiz time. Expense or asset? Think about these: a one time license, a monthly subscription, and an internally developed system may be capitalized if development costs meet criteria. Which do you think is an expense and which is an asset? Take a moment and decide. Passing to classify items yourself helps you understand the logic much better than just watching or memorizing rules. Here is a story. Two similar businesses buy the same tool. Business A expenses everything right away, while Business B spreads the cost over time. Neither is doing anything wrong, but their financial reports now tell very different stories. This shows how small accounting choices can have a big impact. Capitalization isn't about being aggressive, it's about matching cost with future benefit. To capitalize something, it should have an identifiable cost, provide value over time, and last a reasonable period. If you can't justify that it will be useful in the future, it shouldn't be capitalized. This way, your accounting stays logical and consistent. Common mistakes: expensing everything automatically, capitalizing subscriptions without checking duration, or ignoring if the cost really matters. This happens because of shortcuts, not bad intentions. Skipping the thinking step may save time. but it makes reports confusing and less useful. Here is a simple three-step process to decide. Identify the payment type. See how long the benefit lasts and check if you control it or need to renew. Use this every time and your accounting decisions get much easier. Consistency matters more than getting it perfect the first time. Who can use this? Freelancers, small teams, and growing businesses all benefit. Freelancers get clarity on costs, small teams get consistency, and growing businesses get comparability. The same thinking works for all three. Once you understand the logic, you can apply it anywhere to keep your accounting clean and reliable. When in doubt, ask yourself, are you buying value or just time? And can you reuse it next year? These two questions cut through the complexity and help you make smarter decisions. Good accounting always starts with asking the right questions. Stop recording everything by default. Use the framework we shared and write down your reasoning for each decision. You don't need fancy systems, just structured thinking and documentation. Doing this alone makes your financial understanding much stronger and your reports more reliable. Try it yourself. Drop a tricky example in the comments and classify it before watching the answer. The goal is practice and not perfection. Use this framework with every new tool or subscription and revisit it often. Apply, review, improve. That's how your accounting skills get sharper over time. If this cleared your confusion, hit that subscribe button and turn on notifications so you never miss simple practical finance tips. Thank you very much.